Good morning, my dear friends. So, it is the last session for internal reconstruction. So, welcome to all of you. So, after once we completed internal reconstruction, then one more chapter is pending according to our schedule, which is liquidation of companies, which we are going to take place from next session onwards. So, that's why this is the last session for internal reconstruction. So, due to time barrier, we may not or we unable to complete all the problems which were there in the ICAI resource. But for each and every model, just I want to take for the purpose of consideration. And while compared to amalgamation, internal reconstruction is not that much of technical as well. So I already explained the content and the concept. You already hope you understood that point as well. So a quick recap till now what we have discussed in this chapter. So the major reason why people are going for internal reconstruction is to show true and fair view of financial information. In case of internal reconstruction, no new company was incorporated and there is no liquidation of existing company also takes place. So the same company will continue its business activities, but after completion of internal reconstruction, we will add the word unreduced. We took an example. In the given situation, P&L account debit balance was 8 lakhs. How a typical internal reconstruction will happen? So the reassessment of assets and liabilities will be happen. There are so many negotiations or compounding activities are going to take place with different stakeholders. That is, as with liability holders, outsiders, as well as inside parties, that is equity shareholders and preference shareholders. Then the profit derived through such activities will be set off with the existing P&L account debit balance. That is the major objective of the internal reconstruction, to show the existing financials at the correct net worth. But for the purpose of completion of internal reconstruction, the court approval should be required. The plan which takes place among the company as well as other shareholders or stakeholders should be approved by the court. Then only you can start your internal reconstruction process. Then during internal reconstruction, what are the procedural issues are going to take place? Alteration of share capital, variation in shareholders' rights, reduction of share capital, compromise and arrangement, surrender of shares. It to be discussed, surrender of shares not yet discussed by me. Coming to alteration of share capital, if there is any increase in authorized share capital, which coming into the alteration of share capital only, which is nothing but alteration of capital class. For the purpose of accounting, we are not making any special accounting treatment, but under notes to account, simply you have to enhance the authorized share capital. Subdivision or consolidation of shares. So subdivision or consolidation, again, there is no change in the paid up capital. There is only change in the face value and number of equity shares. We take one example, sir. The existing number of equity shares for 10,000 face value at the rate of 100 rupees, total paid up capital 10 lakhs. One share was subdivided into 10 shares. Now, after subdivision, the number of shares will be counted as 1 lakh and face value was at the rate of 10 rupees. There is no change in the paid up value, 1 lakh multiplied with 10, which leads to 10 lakhs. Coming to the accounting adjustment, equity share capital 100 rupees, you have to cancel. To equity share capital 10 rupees face value, you have to make it credit. There is no change in the paid up capital. Conversion of shares into stock and vice versa. I already told you, generally there is no difference between share and stock. The only major difference is stock doesn't have any denomination as like share. And stock cannot be issued directly to the public. The existing fully paid up equity shares can only be converted into the stock. So stock can be issued any portion to any party, as not like a share, because it doesn't have any denomination. Any much of stock you can issue to any party. So why in generally during the process of internal reconstruction there is a scope to conversion of share into stock? So during the process of reconstruction, we already saw one problem. So n number of payments are there. So at the time of making payment, if the availability of stock is there, then it is very easy to distribute among the various persons. So that is the reason why in general people are go for conversion of shares into the stock. but there is no difference between capital and stock. It should also be form part of the capital, but under the separate head, we will show it as a stock. So equity share capital account to equity stock account. One more observation here, denomination was available face value. Here there is no denomination at all. Then coming to variation in shareholders' rights, the variation with respect to voting rights as well as dividend, that is some examples I given, 15% preference shares to 9% preference shareholders, cumulative preference shares to non-cumulative preference shares. The old one should be debited and the new one should be created. That is the simple accounting treatment we are going to follow with respect to variation in voting rights. Coming to reduction of share capital, the reduction may happen in paid up value or as well as face value. Anything you can term it as a reduction of share capital only. Coming to reduction in unpaid value. Reduction in unpaid value is nothing but conversion of partly paid up equity shares into fully paid up equity shares. Existing number of shares were 10,000. Existing paid up value was 8 rupees. The total paid up capital was 80,000. Face value 10 rupees. Unpaid value 2 rupees. Now, in the process of reduction of share capital, if you are making reduction in unpaid value, that is 8 rupees as a fully paid up share, then the existing 10 rupees face value you have to cancel. That is equity share capital accounted at 10 rupees, existing amount 80,000. To equity share capital 8 rupees, existing amount 80,000. What happened really here, sir? The partly paid up shares was converted into the fully paid up share. Now the face value was 8 rupees. Also the paid up value was 8 rupees. There is a reduction in unpaid value only. Coming to here, payment towards paid up value. We can make it reduction in the share capital by making payment to the paid up value as well. Here, if you observe, the existing equity shares are fully paid up shares, 10,000 to 10 rupees, 1 lakh. We are making a payment of 3 rupees. That is equity share capital 10 rupees to equity share capital 7 to cash 30,000. Here, if you see, there is a reduction in paid up value as well as face value. In my second scenario, there is only reduction in paid up value, but there is no reduction in the face value. Why? Because if you observe, 10 rupees share was converted into 7 rupees means reduction both in paid up value as well as face value. But here, I wrote the entry equity share capital account to bank account. That means there is only reduction in the paid up value. I repaid to the extent of 3 rupees back to the equity shareholders, but still face value was showing at 10 rupees, guys. So anyway, reduction in face value and paid up value or reduction in paid up value, anything will contemplates to reduction of share capital only. Coming here, cancellation of paid up value but not face value, paid up value and face value. So like this and like this. Here through payment, here through cancellation. That is the difference. Here cancellation of paid up value and face value I am talking. So equity share capital 10 rupees, to equity share capital 6 rupees. The remaining amount transferred to capital reduction. Here the remaining amount was transferred to cash. That is the only difference. Here cancellation of paid up value but not face value. Simply you should transfer the amount to capital reduction account. Here we transferred such amount to the bank account. I already told you here only payment, here cancellation. There is no difference in the journal entries. Here bank will come, here capital reduction will come. On behalf of cash, in the third model, capital reduction or reconstruction account will come. Hope you got my point. This is revision. So 2 days gap is there. So just in the process, I'm revising the content. I don't want to take that much of time. Again, I have to do a lot of problems in today's session. Okay. Now coming to the next issue, which was compromise and arrangement. Compromise arrangement is also form part of internal reconstruction. Compromise or arrangement is an agreement entered between company and other stakeholders. Stakeholders may contain outside parties or the shareholders. If any agreement with outside parties, which was known as compromise, if any agreement with shareholders, which is known as arrangement, actually. For which purpose? For the purpose of sacrifice made by the other parties. So, to set an agreement as a compromise or arrangement, there compulsory some sacrifice should exist. Otherwise, if there is no sacrifice, then such agreement will not term it as a compromise and arrangement. So it is an agreement entered between company and stakeholders for the purpose of sacrifice made by the other parties. Now, here we took some examples. So existing equity shareholders were sacrificed their reserves. Then you have to pass the entry reserves account to capital reduction account, or reserves account to reconstruction account. Capital reduction account or reconstruction account, both are same. There is no difference at all. Then I took another example. The existing 10% debentures for 10 lakh. The existing debentures ready to foregone 30%, and for the remaining company is going to issue equity shares. Then 3 lakhs will be transferred to capital reduction. For the remaining 7 lakhs should be cancelled and transferred to equity share capital account. Then 10% debentures accounted are 10 lakh, to capital reduction 3 lakh, to equity share capital 7 lakh. And coming to here, the existing 10% debentures for 10 lakh only, and the existing debentures ready to foregone 30%, provided the company issue 1 lakh worth of equity shares. Provided means the existing debenture holders ready to foregone 3 lakhs when if company is ready to issue 1 lakh worth of equity shares as a result of foregonement. That means the real sacrifice was not 3 lakhs, which was a gross sacrifice was 3 lakhs. As a result of sacrifice, they are expecting 1 lakh benefit. That's why the net sacrifice was 2 lakhs. That means the real amount foregone by the debenture holders was only 2 lakhs. That amount only you can transfer to the capital reduction account. Remaining 1 lakh as a process of sacrifice they are expecting. That's why you are issuing the equity shares. You should cancel the 10% debentures only for 3 lakhs. Sir, what about the remaining 70%, sir? Still they are continuing as a 10% debentures. He is only talking about the 3 lakhs. That is 30% sacrifice only. As a result, they are expecting the 1 lakh. So that's why you have to cancel the debentures for 3 lakhs only. Sir, what is the difference between second scenario and third scenario? In second scenario, as a result of the foregonement, debenture holders are not expecting any single rupee. Here we are issuing the equity shares for the remaining 70% portion. But coming to the third scenario, they are sacrificing the 30%, but as a result, they are expecting the 1 lakh. Sir, there is no discussion about the remaining 70%. There is only discussion about the existing 30% sacrifice. They are ready to sacrifice 3 lakhs. As a result, they are expecting 1 lakh. So that's why the net sacrifice made by the debenture holders was only to the extent of 2 lakhs. Such amount only you can transfer to the capital reduction account or reconstruction account. Hope you got my point, guys. This is the tricky point. You have always observed, sir, company is ready to issue to the other party for the remaining portion or as a result of sacrifice made by them. Sir, for the remaining portion, there is not that much of difficulty exist. But we are issuing the equity shares or preference shares as a result of foregone made by the other party. Then you have to calculate the real sacrifice or the net sacrifice. According to you have to pass the journal entry. That's it, guys. Now coming back to unrecorded liability or unrecorded asset concept. Sir, in generally arrears of cumulative preference dividend will coming into the unrecorded liability point in case of internal reconstruction. Sir, making payment at the time of unrecorded liability, the entry was reconstruction to cash or capital reduction to cash. Sir, how it came, I already explained in detail in last session. That is, first you have to record the liability by passing the entry capital reduction to liability. At the time of making payment liability to cash or bank, liability cancelled, the entry was reconstruction to cash or capital reduction to cash. Such unrecorded liability foregone by the other party, there is no entry. If you want, you can record it again at the time of sacrifice made by the other party, entry liability to reconstruction cancel. Sorry, first entry and second entry entirely cancelled. That way there is no impact. So that way there is no entry. So coming to unrecorded asset realized in the outside market, the entry was bank account to reconstruction account at the rate of realization amount. You want, sir, how to get that entry? That is, first you can record at the rate of book value asset to reconstruction, then realize in the outside market bank account to asset account. That is the profit 1 lakh you got again transferred to reconstruction account. So the entry bank account data to here reconstruction 5, reconstruction 1 lakh, total 6 lakhs. So that's why at the rate of realizable value bank account data to reconstruction at the time of realized in the outside market and unrecorded asset related aspects. Then, sir, after completion of the entire internal reconstruction process, then you have to find out the balance in reconstruction account. In generally, you will get credit balance. Sir, why in generally you get credit balance? That is the main objective of internal reconstruction. If you achieve a negative balance, no one will go to the internal reconstruction process. The company will be wound up. The company is going to liquidate. Okay. Sir, once the company is going to liquidate, what are the legal consequences or what is the accounting treatment, sir? That and all we are going to see in the next chapter. So that's why the combination of chapters, amalgamation, internal reconstruction, liquidation are put under one schedule. So hope you got that point as well. Okay, coming here. So the balance in reconstruction account should be first set off with debit balance in the profit and loss account. After that, you can set off with fictitious assets. Whether it was mentioned or not in the problem, you should nullify such profit and loss account debit balance and fictitious assets with the existing reconstruction account. Coming to intangible asset, if it was clearly mentioned in the problem, then only you have to nullify the existing reconstruction account balance can be utilized to nullify the intangible asset if there is a clear explanation or is a clear-cut information given in the problem. Otherwise, no need to nullify the intangible assets balances. Sir, after nullifying, if there is any balance in the reconstruction account, after set off, such amount you can transfer it to the capital reserve account. Sir, after completion of internal reconstruction, you should add the word under reduced as per Companies Act 2013. One more important note was, sir, if any property, plant and equipment was revalued or reassessed, then during that process, if such for property, plant and equipment derived a loss, such loss should be carried forward for minimum 5 years under notes to accounts. This is also as per Companies Act 2013 as per Schedule 3. Okay. So then we entered into illustration number 3. We completed illustration number 3 successfully. Am I right, guys? Are you with me, all of you? Are you in same phase? Now, in today's session, let us move on with problems, guys. One second, please. Some of the doubts raised by our friends. Sir, can provision for doubtful debt be taken as short-term provision? Why, sir? What are the reasons? Please explain, sir. So that is Schedule 3 issue. One of our friends asked, sir, is it PBD can I taken as short-term provision? My dear, sir, I'm explaining one thing here, which is the form part of Schedule 3 actually, which is not related to me, but still I'm explaining. Please concentrate. Coming to short-term provision, such a provision is created for less than 12 months period or less than or equal to 12 months period. Why? Because, sir, provision for bad debts means, for example, right now you are at 31st March 2020. Let us assume 2021. Now you are at 31st March 2021. Now, as on 31st March 2021, first I will assess debtors balance. Let us assume which was 1 lakh. So, based on my experience, out of such 1 lakh, how much amount can I collect in this particular period? How much amount I am able to collect in that particular period? I will check according to my estimate or according to my experience. Sir, such estimate is for how many number of months or a day? That is definitely within less than 12 months. Let us assume out of such 1 lakh, so I have a confidence of collecting 95%. I doesn't have any confidence to collect 5%. Then on such 5% only, I will create or I will treat it as provision for bad debts. I will create PBD, right? Now, my question is here, you are creating such provision for the purpose of obligation should be arrived after 12 months, within 12 months. That is within 12 months, right? That's why it was termed as short-term provision. Number one. PBD was termed as short-term provision. Number two. Sir, why PBD was shown under provisions? Why it was not reduced from debtors? Why it was not reduced from debtors? Actually, there are two accounting treatments available. Number one, you can make it reduce from current assets under debtors, or you can show it under short-term provisions. Actually, there are two accounting treatments are available. One is you can make it reduce from debtors, or you can show it from short-term provisions. But as per the note in the schedule 3, so we are doing the practice of showing such provision for bad debts under short-term provisions only. And for the purpose of our all ICAI resources as well, if schedule 3 format is applicable, then we have to show it under short-term provisions only. No need to reduce from debtors. Understand? Okay. Next, one more thing. Sir, what is unrepresented assets and liabilities? Sir, unrepresented assets and liabilities means, again, like fictitious assets, guys. Unrepresented asset. Sir, even though it was shown under an asset, it doesn't have any real worth. For example, preliminary expenditure not written off, it was shown under asset only, but which was an unrepresented asset. Okay. So unrepresented liability. Unrepresented liability means it was an unrecorded liability. Sir, there is no representation in the information with respect to as a liability. Got my point? So unrepresented assets and liabilities coming into the fact as like unrecorded asset and liability. So including fictitious assets. Got my point, huh? One more thing. Yeah, nothing is there. Something, Vijay Shankar. Hey, Vijay Shankar, still you are asking, yeah. Your doubt related to LK Limited. In the last session itself, I completed that. Good morning, sir. On the other day, I have asked you to give a journal entry for a question regarding debentures issue that I have raised. The question is from illustration 8. Still, I have a doubt in that part, sir. Your answer was, oh, it is valid with the ICAI material. Okay, I'll check at the end. I will check at the end, Vijay Shankar. No worries. So I think so. It is there at my part. So the entry passed by me is there. I think so. I cleared your doubt. So somewhere here it is there. Okay, leave it. I'll clear your doubt at the end. If there is any variation in between my answer and the ICAI answer. Okay. So let me allow on further problems, guys, without wasting much time. Please all of you concentrate. So today's class is a little bit in smooth manner, and you have to concentrate on more. Why? Because we are only concentrating on the problems, guys. So you have to complete the quick calculations and all other stuff. Then only we can able to complete the much more problems. Please all of you concentrate. Yes. So let us move on with problem number 4. I think so we have to start with problem number 4. Illustration 6, 5, 4. Yes, this is illustration number 4. Right, guys, concentrate. Sir, given below is the balance sheet of Rebuilt Limited as at 31st March 2011. Share capital, reserves and surplus, long-term borrowings. Coming to current liabilities, trade payables, other current liabilities. Under assets, property, plant and equipment, intangible assets, inventories, trade receivables. Coming to notes to accounts, equity share capital, 15,000 equity shares at the rate of 50 rupees each, existing face value 50. Preference share capital, 12,000 7% cumulative preference shares, existing shares are cumulative preference shares. rupees 50 each. Again, preference share face value also 50 rupees. Preference dividend is in arrears for 5 years. Preference dividend is in arrears for 5 years. So preference dividend is a unrecorded liability. Tell me guys, which is a unrecorded liability. Unrecorded liability. Fine. Next, reserves and surplus, debit balance of profit and loss account. That's why shown in negative figures, which is a debit balance of profit and loss account. Long-term borrowings. Coming to assets, 2 PPE were there. Building less depreciation, plant less depreciation. Intangible assets, trademarks and goodwill at cost price was given. Okay. The company is not earning profits, short of working capital, and a scheme of reconstruction has been approved by both the classes of shareholders. A summary of the scheme as follows. The equity shareholders have agreed that their 50 rupees face value shares should be reduced to 2.50. 50 rupees reduced to 2.50 means sacrifice 47.50 per share was sacrificed by each and every shareholder on cancellation of 47.50 per share. Okay. They have also agreed to subscribe for 3 new equity shares of 2.50 each for each equity share held. Now, equity shareholders are doing 2 things for us. Number 1, they are ready to sacrifice to the extent of 47.50 per share, and the equity share will become 2.50 each. After that, they have also agreed to subscribe, which is altogether a new subscription, which is altogether a new issue. Subscribe for 3 new equity shares of 2.50 each. How many number of existing equity shares are there? 15,000. They are ready to subscribe 3. 15,000 into 3. Total 45,000 new equity shares they are going to subscribe at the rate of 2.50 each for each equity share held. One second guys, I'll go to the requirement. So first I will see the requirement, then I will read the remaining content. Okay. Show by journal entries how the financial books are affected by the scheme and prepare the balance sheet of the company after reconstruction. The nominal capital as reduced is to be increased to 6,50,000 for preference share capital and 7,50,000 for equity share capital. So 6,50,000 for preference share capital, 7,50,000 for equity share capital. The existing nominal capital was increased, which is also known as alteration of share capital, which is form part of internal reconstruction only. So first, I will read one by one point, then I will pass the journal entries. At the end, we will see the balance sheet. Okay. Now, first, without wasting much time, let us move on with my OneNote simultaneously. That is illustration number 4. So journal entries in the books of come on guys, what is the company name? Rebuild Limited. Journal entries in the books of Rebuild Limited. The first and foremost entry, existing equity share capital was reduced through cancellation of 47.50 per share. Equity share capital account at all. You have to cancel now. So existing 50 rupees, right? Face value. How much amount, ma? So that is 15,000 into 50, existing 7,50,000. 7,50,000. to equity share capital account converted into 2.50 per share. 15,000 into 2.5. 37,500 to reconstruction account. How much? 7 lakh 12,500. Next, the existing equity shareholders were subscribed to the extent of 3 shares for every equity share. Now, at the time of subscription, the entry bank account data existing 15,000, 3 shares, 2.50 per share. So 15,000 into 3 into 2.5, which leads to 1 lakh. Which leads to 1 lakh 12,500 to, just I'm passing the direct entry, guys. So you can pass bank to equity share application and allotment, then equity share application allotment to equity share capital as well. So just I'm passing the direct entry to equity share capital account. Which was 1,12,500 rupees. So these are the 2 entries we have to pass based on first point. That is point number 1. Now let me read point number B. The preference shareholders have agreed to cancel the arrears of dividend. Number 1, first, arrears of dividend is an unrecorded liability. If any arrears of dividend was foregone, if any arrears of dividend sacrificed by the other party, then what is the journal entry, friends? Just I'm opening here. Arrears of cumulative preference dividend liability foregone by the other party, no entry. So that's why amount foregone for the purpose of arrears of dividend, there is no impact, there is no journal entry. And to accept for each 50 rupees share, 4 new 5% preference shares of 10 each, 4 into 10, 40, plus 6 new equity shares of 2.50, 6 into 2.50, which leads to how much, guys? 6 into 2.50, which leads to 15. Here 40 plus 15, 55. All credit as fully paid up. One more time repeating, the preference shareholders have agreed to cancel the arrears of dividends. Leave it, there is no impact. And to accept for each 50 rupees share, 4 new 5% preference shares of rupees 10 each, plus 6 new equity shares of 2.50 each. All credits as fully paid up. For 50 rupees, they are agreeing 55 rupees. For 50 rupees, they are agreeing 55 rupees. Means 5 rupees lost to the company. Such a loss per share should be again transferred to the reconstruction account, guys. It is not profit, which is loss. Earlier we got profit 47.50 per share. Here we got 5 rupees loss. Let us pass the journal entry first for better understanding. Concentrate. Existing preference share capital. So how much? 7%. 7%. So 7% cumulative. 7% cumulative preference share capital account return. 7% cumulative preference share capital account return. So face value how much? 50 rupees. It told face value how much? 50 rupees. Existing amount how much? Existing amount, if you observe, which were 6 lakhs. Which were 6 lakhs. So what you are issuing through cancellation, 4 new 5% preference shares to 5% preference share capital account. So 5% preference share capital account. Now all of you please concentrate. Existing number of preference shares for 12,000. For 12,000, we are issuing each share for 4 new preference shares. So 12,000 into 4 into each preference share issued at the rate of 10 rupees. Now 12,000 into 4 into 10 rupees, which leads to 4 lakh 80,000 to equity share capital account. To equity share capital account. How much we are issuing for equity share capital? Please all of you concentrate. 6 new equity shares of 2.50 each. 12,000 into 6 new equity shares into 2.5 each. 12,000 into 6 into 2.5, which leads to 1,80,000. So now total of debits doesn't equal to the total of credits. If you observe, how much excess we paid? 60,000. So such 60,000 you can transfer it to the reconstruction account. A reconstruction account, 60,000. If you want to cross check, you can cross check. I already told you, per share 5 rupees you are paying in excessly to the preference shareholders. That is existing number of shares for 12,000. 12,000 into 5 was 60,000, which was lost to the entity. Such loss only you are transferring it to the reconstruction account, guys. Hope you understand. Now let me continue the next entry. Lenders to the company for rupees 1,50,000 have agreed to convert their loan into share. Okay, lenders to the company for 1,50,000 have agreed to convert their loan into share, and for this purpose they will be allotted 12,000 newly preference shares of rupees 10 each and 12,000 new equity shares of rupees 2.50 each. 12,000 into 10 rupees means 1,20,000 plus 12,000 into 2.5 means 30,000. 1 lakh plus 1,20,000 plus 30, which is equal to 1,50,000. Simply you have to cancel the loan amount of 1,50,000 by issuing of preference shares as well as equity shares. Now, where is that loan? Let us see first here. Under long-term borrowings, loan is there, 5,73,000. Out of such 5,73,000, we are cancelling here to the extent of 1,50,000. Now let us pass the journal entry. Loan account debtor. Loan account debtor 1,50,000. You have to cancel for to the extent of 1,50,000 only. To preference share capital. The new preference shares for always you are issuing at 5%. If you see newer 5%, so that's why 5% preference share capital account to 5% preference share capital account. So 12,000 into 10 in bracket 12,000 into 10, 1,12,000 to equity share capital account. So equity shares you are going to issue how many? Sorry, 12,000 into 2.5, right? Which were 30,000. No profit, no loss. Okay. Then point number C over. Coming to point number D. The directors have agreed to subscribe in cash for 40,000. New equity shares of rupees 2.50 each. In addition to any shares to be subscribed by them under A above. Under A, additional shares were subscribed on 3 new equity shares. Addition to that, here agreed to subscribe in cash for 40,000. new equity shares of 2.50 each. It is for further subscription of shares. Again, bank account debtor or cash account debtor, amount 40,000. 40,000. Again, I am passing the direct entry. In examination, you can pass share application and allotment to share capital. Here I am recording the direct entry for time saving to equity share capital account. To equity share capital account. How many number of shares? That is 16,000 shares. 2.50 each means 16,000 shares. So which was 40,000, which for further subscription of equity shares apart from point number A. Now, two more points are there. Please concentrate. Of the cash received by the issue of new shares, 2 lakhs is to be used to reduce the loan due by the company. If you observe, out of 5,73,000, earlier 1,50,000 was cancelled. Still some loan was outstanding. Now, out of such loan, 2 lakhs to be used to reduce the loan due by the company. So cash settlement is happening right now. Now you can make a payment to the loan to the extent of 2 lakhs. Loan account debtor to cash or bank account. Cash or bank account. You may ask, how did you got such 2 lakhs cash or a day? Here I have 40,000 I issued. In the second entry, I have 1,12,500 and the existing cash balance is also there in balance sheet. With that resource, I can complete that. Okay. Then the equity share capital is cancelled to be applied to write off the debit balance in profit and loss account. That is simply is telling that the balance in reconstruction account, he can set off with P&L account. Whether he was mentioned or not, we have to set off. To write off 35,000 from the value of the plant. You have to write off the 35,000 from plant also, he told. Any balance remaining is to be used to write down the value of trademarks and goodwill. It is clearly mentioned that still if there is balance in reconstruction account, you can utilize to set off the trademarks and goodwill amount. Okay. Now, before doing all such things, first let me do one thing, guys. Please all of you find out the balance in reconstruction account. Balance in reconstruction account in first entry 7,12,500 plus in third entry minus 60,000. There is no reconstruction balance in fourth entry. Fifth entry there is no reconstruction. Sixth entry there is no reconstruction. The balance in reconstruction was 6,52,500. So reconstruction account debtor. Reconstruction account debtor 6,52,500. Am I right? All of you, let me check the accuracy. So which was 6,52,500 if you see in the answer as well. So just I checked the accuracy. So reconstruction account debtor 6,52,500. You have to cancel first profit and loss account debit balance. To profit and loss account. So P&L account debit balance was how much? Given in the problem, please all of you observe. 4,51,000. 4,51,000. And he told one more thing. You have to reduce the plant as well. Plant to plant account. To plant account, I have to reduce. Plant account, how much I have to reduce? 35,000. 35,000. Still, if there is a balance in reconstruction, 6,52,500 minus 4,51,000. 4,51,000 minus 35,000. Still, there is a balance of 1,66,500 in reconstruction account. You can set off such value with trademarks and goodwill. So under intangible asset, trademarks and goodwill is there. So you can set off to trademarks and a goodwill account to the extent of 1 lakh. 66,500. So we are unable to set off the entire trademarks and goodwill. We can only set off to the extent of 1,66,500. There is no balance in reconstruction account. For example, after nullifying the balance, still if there is any balance in reconstruction account, we can transfer it to the capital reserve. But in the given scenario, there is no balance in reconstruction account. The reconstruction account balance is not at all sufficient to nullify the intangible asset itself. So that's why there is no balance itself, guys. So these are the end of the journal entries. This is the end of journal entries. Such a simple journal entries. Next, let me continue. What is given? Show the journal entries, how the financial books are affected by the scheme, and prepare the balance sheet of the company after reconstruction. The nominal capital has reduced is to be increased to 6,50,000 for preference share capital and 7,50,000 for equity share capital. Now let us build the balance sheet, guys. Please all of you concentrate. Balance sheet of Rebuild Limited. Rebuild Limited. Anything I have to mention in the bracket? Yes, I have to mention and reduced. I have to mention the word and reduced, which is very, very important. And reduced. So as on which date, guys? Which was date was given or not given? So not given. That's why I'm taking the same balance sheet date as at 31st March 2011. 31st March 2011. Okay. And coming to here, the one, equity and liabilities. Equity and liabilities. Under that, shareholders fund. Shareholders fund. A share capital. A share capital. Go to note number 1, guys. You put notes to accounts here. Notes to accounts. The note number 1, share capital. First, under share capital, you have to record authorized share capital. Authorized share capital. So in authorized share capital, he clearly mentioned 2 things. If you observe, he clearly mentioned 2 things. One is the nominal capital as reduced is to be increased to 6,50,000 of preference share capital and 7,50,000 of equity share capital. Now, 7,50,000 divided by 2.5. How many number of shares? 3 lakhs number of shares are there. 3 lakhs. That is coming to equity share capital under authorized share capital. Coming to equity share capital. Coming to 1 second, please. Equity share capital. 3 lakhs. How many number of equity shares? 3 lakhs. Equity shares at the rate of 2.5 rupees per each, which leads to 7,50,000. That is the thing he told, right? Next, coming to preference shares. Preference share capital. Coming to preference share capital. One more thing, which is 5% preference share capital. Which is 5% preference share capital. How much, sir? 5% preference share capital. So each preference shares we are issued at 10 rupees. If you see anywhere, it was 10 rupees. So 6,50,000 divided by 10. 65,000 shares. Preference shares at the rate of 10 rupees each. So which leads to 6 lakh. 50,000. Total 14 lakhs, which is not the paid up capital, which is only authorized capital, Now coming to paid up capital. So coming to paid up capital, under that first we should record the equity share capital. Now, from entry number 1, please all of you concentrate. So the existing equity share capital cancelled. We issued 37,500. 37,500 plus further issue 1,12,500 plus. On the third entry 1,80,000. Fourth entry 30,000. Fifth entry 40,000. Sixth nothing. Seventh nothing. So total I got 4 lakhs, guys. Total I got 4 lakhs. Please all of you calculate from your side as well. 4 lakhs. That is, amount was 4 lakhs. 4 lakhs means 1,60,000 equity shares. So which are 1,60,000 equity shares at the rate of 2.5 each, which is 4 lakhs. Next, coming to 5% preference share capital. Coming to 5% preference share capital. So let us calculate the 5% preference share capital. All of you, please with me. Sir, I am doing the balance sheet only for your benefit. I can skip it as well. I can go to the next problem. But you have to habituate how to complete the problem. So that's why please concentrate. So the entire existing 7% preference cumulative preference share capital was cancelled. They issued 4,80,000 under entry number 3. And entry number 4, 1,20,000. Entry number 5, no. Entry number 6, no. Entry number 7, no. So total I got 6 lakhs, guys. I got 6 lakhs. So amount was 6 lakhs. Amount was 6 lakhs. Divided by 10 means 60,000 preference shares. So 60,000 preference shares at the rate of 10 each. If you observe, it should be within the nominal capital. Nominal capital 7,50,000, here 4 lakh. Here 6,50,000, here 6 lakh. So within the nominal capital. So 4 plus 6 total was 10 lakhs. So share capital note number 1, 10 lakhs. Next, B. Reserves and surplus, I think so. There is no reserve and surplus because the entire debit balance in P&L account was nullified. So leave it. There is no reserves and surplus. We can directly start with non-current liabilities, right? So number 2, you can start with non-current liabilities. So under non-current liabilities, long-term borrowings is there, which is loan actually, which is loan. A long-term borrowings is there. The bracket I'm mentioning, which actually loan. Now, how much balance exists, sir? How much balance exists? So the existing balance was 5,73,000, from which loan account, wherever loan account is there, you paid 1,53,000 through settlement of preference shares and equity shares. Then 2 lakhs through payment of cash. So minus 1,50,000 minus 2 lakhs. So 1,50,000 minus 2 lakhs, which was 2,23,000. Which was 2,23,000, guys. No need to go for working note. Next, current liabilities. Oh, sorry. Next, current liabilities. Under current liabilities, what are exist? Trade payables and other current liabilities. I think so. We not yet touched such things. Trade payables and other current liabilities, we not yet touched it. So if you want, you can check in the general entries. Trade payables and other current liabilities, we not yet touched. So as easily you can record as per the given information. A, trade payables 2,07,000. B, other current liabilities. The other current liabilities 35,000, guys. Right? So this is the total of liabilities side. Coming to asset side, under assets, non-current assets, under assets, non-current assets, non-current assets, APP, right? Or 1 PP, 1 PP. Under the PPE, is there any changes there? Property, plant and equipment, please all of you concentrate. Under notes to accounts, there are 2 PPE exist, building and plant. Plant was reduced. Plant was reduced, guys. Please all of you bear that point in your mind, 35,000. Remaining was as it is. Only there is a reduction in plant. So I don't want to go to working note. I will reduce 6,68,000 minus 35,000 directly. But in the examination, you have to put a notes to account separately, guys. So total amount 6,33,000 for me. 6,33,000. But you have to provide a separate note. A separate note. I am not mentioning. Next, after PPE, intangible assets. Coming to intangible assets. Sir, existing, how much, sir? Intangible assets 3,18,000. Existing was 3,18,000. From that, I written off certain portion of the intangible assets here, 1,66,500 minus 1,66,500, which was 1,51,500, guys. Which was 1,51,500 with the intangible portion. Then after non-current assets, coming to current assets, there is no change in the inventories and trade receivables. I think so. Please let me write non-current assets. After that, current assets. Current assets, inventories was 4 lakh. Then trade receivables, 3,28,000. One more thing, cash and cash equivalents not yet exist under current assets. So let me find out positive balance is there or negative balance is there. That is, if positive balance, I will put bank balance. If it is negative balance, I will put bank OD, guys. So just a second, let me calculate that portion as well. Please allow you with me. Let me calculate the bank balance. First entry, no. Second entry, 1,12,500 plus. Third entry, there is no bank balance. Fourth entry, no bank balance. Fifth entry, 40,000. Here payment is there, 2 lakhs. Okay. So negative balance is there. Let me put the bank OD 47,500, guys. The current liability, here actually I missed out. See, under bank OD, I can put like this, or under other current liabilities also I can add it. Bank OD, 47,500. Okay, that is under liability side. Bank OD, that is under liability side. So there is no bank balance under asset side. So please all of you observe the given answer as well. Let us cross check whether we made it correctly or not. Just a second, guys. Anything was missed out by me? Just a second, please. It was not at all matched. So many persons are telling, sir, equity share capital comes to be 4,60,000. Oh my God. Okay, just a second, please. I will check from my side as well, Amma. One second, please, all of you. Oh, I had a small clerical mistake. The journal entries, I think so. That's why it is coming as wrong. Please, all of you, be hold. What is the mistake done by me? Let us check. 1 second, please. Okay. Okay, this one correct. Oh, this one, nah. This one I made a mistake, nah. That is further shares subscribed by the directors, right? Sorry, 40,000 shares, right? So 40,000 into 2.5. This is not 16,000. Okay, fine. Agreed with you guys. Clerical mistake here and there. I am checking, nah. In Lappy here and there I am checking. That's why. So 40,000 into 2.5, which leads to 1 lakh. Agreed with you. So that's it, the reason why bank balance was insufficient actually. I think so. Right now we got the correct positive bank balance. Once again, here I changed means here also I have to change, right? Here also I have to change. That is equity share capital. Now how much, guys? Please all of you recalculate the equity share capital once again. 37,500 plus 1,12,500 plus 1,80,000 plus 30,000 plus here 1 lakh plus, so total 4,60,000, right? Equity share capital 4,60,000, guys. It's not 4 lakh, it was 4,60,000 divided by 2.5 means which were 1,84,000 shares. Sorry for my inconvenience, which were 1,84,000 equity shares. 4,60 plus 6 lakhs, which was 10,60,000. So remaining entire portion was correct, right, in clerical. So here 10,60,000. Please all of you change it as 10,60,000. Now there is no scope for occurring the bank OD. Here we got the cash and cash equivalents. Cash and cash equivalents. Positive we have. If you want to check the recalculate, all of you along with me, here 1,12,500 positive. 1,12,500 positive. Here 1 lakh now. You paid 2 lakhs, right? Now 12,500 positive balance is there with you, which was 12,500. Now if you check the balance sheet total, it should tally, guys. Please all of you check from your side the balance sheet total. It will tally. I don't want to check. It will tally. Why? Because just now I cross-checked, a problem answer. So the cash and cash equivalent information was 12,500. So which was 10,60,000 share capital. Is it okay with you? All of you with me? There is only small clerical issue. That is on behalf of recording the 1 lakh, I recorded the different figure. Okay. Yes, balance sheet tally, sir. Okay, fine. Fine. Okay. Now, At this stage, just I want to put a small break, guys. Please, all of you take a break up to 8:15. From 8:15 to 9:40, like that, we will take approximately 1 hour or 1.5 hour session. How much time? Yeah, 1 hour 40-minute session we will get. There I will explain the share surrender account and two more problems I want to try to cover from the internal reconstruction. Please, all of you take break for 10 minutes. Please, all of you join exactly by 8:15, guys. Okay. Welcome back, guys. So we completed up to illustration number 4. We completed up to illustration number 4. Let us move on further our discussion. So now just I want to introduce one concept which was share surrender. So now we will discuss the concept of share surrender. We will do problem on share surrender. Then one more problem on the normal scenario, that is other than share surrender, that's related to compromise and arrangement. We will do one more problem. But first, let me explain the concept of share surrender. Please all of you concentrate. This is important. Share surrender or surrender of shares. Concept is surrender of shares. Surrender of shares. Now first, sir, what is the difference between cancellation of shares, cancellation of shares and surrender of shares? What is the difference? Here, I don't want to explain what is the meaning of surrender of shares. Here I put what is the difference between cancellation of shares and surrender of shares. Through that, you can easily understand what exactly the meaning of surrender of shares. Sir, cancellation of shares means once a share was cancelled, or something foregone by the other party, definitely we will get profit. No doubt about it. In cancellation of shares, definitely if the other party foregone something, we will cancel such share, then we got the profit. But the disadvantage in case of cancellation of shares was, if at any point of time, if you need, there is a requirement of further shares, that is, we can issue such share to the creditors as a settlement, to the debenture holders as a settlement, to preference shareholders as a conversion. There may be a necessity of such shares. But at that point of time, once you cancelled any share, such share was not available. You are unable to issue such shares to the other parties. Then again, you have to issue new shares to them. Sir, issue of new shares is not that much of easy task, guys. Why I'm telling which was not an easy task? Sir, if you want to issue new shares, then if your company is having a listing agreement, you have to pay listing fee. Am I right? You have to print share certificates. Even though it is in the demat account, you have to issue share certificates. If they want to trade further on such share, they have to pay STT, security transaction tax. So many other expenses you have to incur. Maybe you have to incur the share issue expenses. Practically, I am talking, guys. Sir, why you are cancelling the existing equity shares, and for the purpose of making payment to the other parties, why you are searching for the new shares? And all clear bullshit. Your company was already a loss-making entity. So what are all the possibilities you have? You have tried to reduce your expenses rather than why you are cancelling the existing equity shares. Okay, through cancellation, we are getting the profit, no doubt about it. But at the time of requirement of the fresh shares, again, you have to issue a fresh equity shares, due to which you incur some further expenditure, which actually leads to, again, a loss-making company. So why you are doing all such things? Rather than going for cancellation of shares, it is better to go for surrender of shares. In case of surrender of shares, what will happen? I will explain. For example, existing equity share capital was, let us assume 10 lakhs. Let us assume 10 lakhs. So in bracket, number of shares for 1 lakh at the rate of 10 rupees each. This is the existing position. Now, out of 1 lakh equity shareholders, out of 1 lakh equity shareholders, to the extent of 50%, that is, to the extent of 50% means 50,000 equity shareholders ready to sacrifice the entire amount. They are ready to forego the entire amount. But to the extent of 50,000 equity shareholders, even though they're ready to forego, we are not cancelling such shares. We are asking such a shareholder, can you please surrender your shares to the company? Can you please surrender your shares to the company? Now, what I will do, I will definitely reduce the equity share capital, no doubt about it. I will definitely reduce equity share capital. Equity share capital account at R. So, sir, while cancelling the equity shares, what is the entry you will pass? That is equity share capital account at R. Here you will pass to reconstruction. To reconstruction. Immediately, you will recognize it as a profit. At the time of cancellation itself, you will immediately recognize the profit. But here, you will not immediately recognize the profit. First, you should transfer such amount to share surrender account or surrender of shares account, what the case may be. Sure, to share surrender account. To share surrender account. How much amount, sir? 50,000 into 10 rupees. How much, sir? 5 lakh. Equity share capital account at R2, share surrender account. Sir, but due to surrender of shares, company got profit now. But till now, where you recognize such profit? But till now, where you recognize such profit? Please understand, all of you, share surrender account is also a profit account only. Share surrender account is also profit account only. If even single share which was surrendered by the shareholder was not utilized as a further issue of shares by the company to the creditors or the debenture holders. Again, I am repeating, the balance in share surrender is not utilized as a distribution of shares to creditors or debenture holders or other parties. The balance in share surrender account should be again transferred to reconstruction account only. So that's why you can see share surrender account as also a reconstruction account. But the only difference is here we already cancelled, but here not yet cancelled, which are there in the form of shares only. Now concentrate, let me continue this discussion. Now, let us assume the existing creditors balance was, let us assume 3 lakhs is there. Now we want to settle the creditors. We want to settle the creditors through issue of shares which were exist in share surrender account. In share surrender account, shares are there now. Now we want to make settle to the creditors by issuing equity shares through utilization of share surrender account. Now, what is the accounting treatment? Please all of you concentrate, guys, which is very, very important. First and foremost thing. At the time of utilization of share surrender, the entry should be reversed. Entry should be reversed means share surrender account at R. Share surrender account at R to equity share capital account. To share surrender account at R to equity share capital account. At the time of utilization of share surrender, the entry should be reversed. That is share surrender account at R to equity share capital. So amount transferring to share surrender account, the entry is equity share capital to share surrender. Again, you are reissuing means the entry should be reversed. Share surrender account at R to equity share capital account. How much amount you are utilizing out of 5 lakhs? For creditors, you are paying only 3 lakhs. Paying 3 lakhs. Not at over, guys. Please concentrate, not at over. Now, creditors account. Now, creditors account should be reversed. You are paying, right? Creditors account should be reversed. It means creditors in generally having a credit balance. Now you have to make it debit. Creditors account debtor 3 lakhs. Sir, to which aspect I have to make it credit, sir? Ante to reconstruction account. Why, sir? I will tell you, just give a second to me. To reconstruction account 3 lakhs. One second, all of you. I already told you, sir, share surrender account is like reconstruction account only. One second. Yeah, please concentrate. Sir, I already told you, share surrender account is like reconstruction account only. Sir, here share surrender means, let us assume reconstruction debit. Here reconstruction credit. Reconstruction debit and reconstruction credit over, then the entry was creditors to equity share capital only. If you observe, the entry was creditors to equity share capital only. Did you understand why here I am making a reconstruction account credit? Again, I am telling you, concentrate. Sir, at the time of surrender of shares, you should not cancel the equity shares. You should make it transfer such amount to the share surrender account by passing the entry equity share capital account to share surrender account. Now the existing creditors balance was 3 lakhs. Let us assume you are paying the creditors through issue of equity shares by utilization of share surrender account. Now at the time of utilization of share surrender account, entry should be reversed. Share surrender account to equity share capital account, which was 3 lakhs. Now at the time of cancellation of such creditors account should be debited and reconstruction account should be credited. What is the net impact, sir? Why you are making the reconstruction account credit? The real thing, what was happened really, sir, by transferring such amount of share surrender by making it to the credit, at that time itself you already recorded the profit. Right now, at the time of making settlement to the creditors, to be frankly speaking, there is no profit, no loss. Simply we are issuing the equity shares which were existing under share surrender. So the entry should be creditors to equity share capital, but we should not record like that. First, we should write the utilization entry share surrender account to equity share capital. Then you can cancel the creditors account, you can make it to the reconstruction account. If you want, you can check by clubbing the two entries. Here reconstruction credit, share surrender debit, one and other account will nullify, the net entry will be creditors account to equity share capital account. So that's why always at the time of utilization of share surrender, the entry was share surrender to equity share capital. So at the time of nullifying the balance of creditors account, creditors to reconstruction account, so then share surrender reconstruction nullify, the entry will be creditors account to equity share capital account will come. There is no profit, no loss at the time of making settlement of creditors. Now all of you please tell me, did you understand that entry first? Before proceeding further, please all of you tell me, did you understand that? Let me check the platform as well. It was closed. Just a second, please. I'm opening the doubts platform as well. It was closed in my device. Just a second. Yes. Tell me guys, is it understood? Everything? Got it, sir. Okay, understood, sir. Indirectly, we have reconstruction profit. Yes, here itself we have reconstruction profit, but at the time of making settlement amount to the creditors, there is no profit, no loss. Why? Because reconstruction credit, share surrender, debit, the ultimate entry was creditors to equity share capital. Okay, all of you, please concentrate. Still, my discussion was not yet over. Sir, here you made settlement to creditors. Let us assume debentures are there. Answer it. Let us assume debentures are there. Sir, debentures how much, sir? So debentures was 2 lakhs. So debentures was 2 lakhs. Sir, debenture holders existing. let us assume 12% debentures, existing 2 lakhs. These debenture holders ready to sacrifice entire amount, ready to sacrifice entire amount. These debenture holders ready to sacrifice entire amount. As a result, they are expecting 1 lakh worth of equity shares, which were present in share surrender account. Now, one more time I'm explaining. Existing 12% debentures for 12 lakhs, right? Existing 12% debentures for 2 lakhs. Sorry, 2 lakh. Debenture holders ready to sacrifice entire amount. As a result, they are expecting 1 lakh worth of equity shares which were present in share surrender account. Now, one thing, first, sir, if the debenture holders ready to sacrifice the entire amount means 2 lakhs was gross sacrifice, no doubt about it. 2 lakhs was gross sacrifice, right? 2 lakhs was gross sacrifice. But out of that, again, they are expecting 1 lakh worth of equity shares. So again, they are expecting 1 lakh worth of equity shares as a result of sacrifice. They are expecting 1 lakh worth of equity shares. Therefore, can you please tell me, all of you, net sacrifice how much? Net sacrifice made by the debenture holders how much? 1 lakh. So net sacrifice made by the debenture holders, all of you, how much? 1 lakh. Now, for these 1 lakh, they are expecting the equity shares. How we are issuing? Through share surrender. That is the thing they are telling. Oh, first of all, sir, whatever the case may be, how much amount here we are utilizing for the purpose of share surrender is my first question. How much amount we are going to utilize for the purpose of share surrender? That is 1 lakh. Sir, at the time of utilization of share surrender, the journal entry is same. That is at the time of utilization of share surrender, entry was share surrender account debtor, share surrender account debtor to equity share capital. That is same. For which purpose we are issuing the shares, I don't mind. If you want to utilize the share surrender, the entry was share surrender account debtor to equity share capital account. It was already proved. I already told you. If at any point of time, if you utilize the share surrender, the entry was share surrender to equity share capital. Now, coming to here, guys, debenture holders. For 2 lakhs worth of debentures, for the existing debentures was 2 lakhs, 12% debentures account. How much are worth? 2 lakhs. What was the real sacrifice made by them? Net sacrifice. The real sacrifice made by them should be transferred to reconstruction account. Definitely. The real sacrifice made by them should be transferred to reconstruction account. Which was a real sacrifice, guys? Sir, if at any time other party made a sacrifice, that amount should be transferred to reconstruction or capital reduction account, which was 1 lakh. 1 second. Sir, you already make it debit the share surrender, right? To nullify the effect, I have to transfer 1 more lakh for the reconstruction. Then only share surrender reconstruction account will nullify. Then debentures will got the equity shares like this. Here creditors, we are nullifying the reconstruction and share surrender. For that purpose, we are transferring amount into the reconstruction. For that purpose, you should transfer 1 lakh more to the reconstruction to nullify the impact. So the net amount should be transferred to the reconstruction was 2 lakhs. Again, I am repeating why you are transferring 2 lakhs to the reconstruction are and 1 lakh for the purpose of real sacrifice, 1 lakh for the purpose of real sacrifice. Another 1 lakh is for the purpose of nullifying the impact. Then reconstruction share surrender will be cancelled to the extent of 1 lakh. Then the entry will be 12% debentures accounted are 2 lakh, to reconstruction 1 lakh, to equity share capital 1 lakh only. For example, sir, there is no share surrender, sir. Let us assume there is no share surrender. If it is in the normal course, what is the journal entry? If it is in the normal course, what is the journal entry? Please concentrate, all of you. If there is no share surrender, if it is the normal course, what is the journal entry, sir? Sir, in the normal course, the journal entry was 12% debentures account. I will cancel entire 2 lakhs, sir. Okay, agreed. The real sacrifice was 1 lakh. So that's why I will transfer it to reconstruction account. Okay, super. For the remaining, they are expecting the equity shares to equity share capital. Okay, fine. Now also I passed the same entry. If you observe, now also I passed the same entry. Why? Because 12% debentures debit. Okay, sir. Reconstruction 1 lakh, make it credit. Remaining reconstruction 1 lakh, share surrender nullify with each other. So this entry, same. The entry which was recorded earlier in the normal course, simply we make it into splitter. That is 12% debentures 2 lakhs to reconstruction 2 lakh. Share surrender to equity share capital 1 lakh. The entry impact will be same. That's why, sir, it is a little bit confusing how our thought process will be at the time of recording the journal entry. Always remembering, at the time of utilization of share surrender, the journal entry was share surrender account to equity share capital account. Now, to the extent of the amount real sacrifice, make it transfer to the reconstruction, 12% debenture to reconstruction, the real sacrifice. Now, to the extent of share surrender debit, you should make it credit to the reconstruction account as well. That is, debit amount 1 lakh, you should come to the reconstruction account as well to nullify the impact. That is 1 lakh plus 1 lakh, 2 lakhs. Got my point, guys? All of you, is it understood? So like this, only share surrender account will be utilized, always coming. Okay. Next, one more, the last thing before going to the problems on share surrender, guys, please all of you concentrate. Which was the last one? So the last one was, sir, existing bank loan is there. Existing bank loan was, let us assume, 5 lakhs. Existing bank loan was 5 lakhs. Now, out of such 5 lakhs, 2.5 lakhs was sacrificed, made by the banker. Sacrifice made by the banker. For the remaining 2.5 lakh, for the remaining 2.5 lakhs, they are expecting, for remaining 2.5 lakh, they are expecting equity shares. We are issuing such equity shares out of share surrender account exist. Let us assume out of share surrender account exists. Already there in share surrender account, some balance sheet is there. Let us assume. One more thing. For this 2.5 lakh sacrificed, for this also, as a result, they are expecting, as a result of sacrifice made by them, they are expecting 1 lakh, guys. As a result, they are expecting 1 lakh. Now concentrate. First, I will check this portion. Sir, as a result, if they are expecting 1 lakh means the real sacrifice was, out of 2.5 minus 1, 1,50,000 is the real sacrifice. For the remaining thing, they are expecting 1 lakh worth of equity shares, again from share surrender. First, let me write the journal entry for this impact. Sir, now 2.5 lakhs was gross sacrifice. Out of that, the real sacrifice was 1,50,000. Again, they are expecting 1 lakh. Now we are utilizing the share surrender account, no doubt about it, to the extent of 1 lakh. Further, the journal entry was, all of you, share surrender account, debtor, amount 1 lakh, to equity share capital account, How much? 1 lakh. Next, second entry. Sir, first we are cancelling the bank loan to the extent of 2.5 lakh. Let us assume bank loan, I'm cancelling to the extent of 2.5 lakh. 2,50,000. So real sacrifice 1,50,000. You have to make it transfer to reconstruction account. No doubt about it. The real sacrifice was 1.5 lakh. You should make it transfer to reconstruction. To nullify the impact of share surrender, again, you can transfer to the 1 lakh. So total amount you should transfer, again, 2,50,000. Am I right, guys? Now, coming back to here. So remaining 2.5 lakhs, we are settling the equity shares. For remaining 2.5 lakh portion, we are settling the equity shares. Now, what is this? For this, what is the journal entry, sir? Again, you are utilizing the share surrender to the extent of 2.5 lakh. The entry was share surrender account to equity share capital account. Share surrender to equity share capital already there. For understanding only, I passed two entries. In bracket, now I am mentioning 1 lakh plus. You are utilizing the share surrender 2.5, right? 1 lakh plus 2.5 lakh, which was 3.5 lakh, guys. Which was 3.5. I'm combining the both the impact. 3,50,000. So share surrender to equity share capital, you can imagine only 2.5 lakh. In your mind, you can put it only 2.5 lakh. Now, the bank loan for the remaining portion of 2.5 lakh was also gone, right? Bank loan for the remaining portion of 2.5 lakh was also gone, right? Now, bank loan account debtor in bracket already there 2.5 lakh. Okay, you might confuse. Just give a second, please. All of you might confuse. Just a second. Please, all of you bear with me. I don't want to combine. First, I will put it, show it separately. Then I will make it combine. Sorry for my inconvenience. Let me put it separately. First, utilization of share surrender entry. Share surrender account debtor to equity share capital account. How much amount, guys? Out of share surrender for the remaining portion, we are issuing 2.5 lakh, right? 2,50,000. 2,50,000. Then concentrate. Bank loan was nullified to the extent of 2.5 lakh. Why? Because we right now made a payment through share surrender. Bank loan account debtor 2,50,000. To nullify the impact in share surrender, I have to make it transfer to reconstruction. Reconstruction account 2,50,000. So to understand the scope, I pass different entries, but I don't want to pass these entries once, these entries once. No. How I can pass really in the examination? Sir, here share surrender 2.5, here 1 lakh. Total I will put 3,50,000. Here I will put total 3,50,000 itself. Next, bank loan here 2.5, here 2.5, total 5 lakhs. Bank loan here total 5 lakhs. Reconstruction here 2.5, here 2.5. I'll totally put 5 lakhs. So here 1 lakh plus 2.5 lakh. Here 1.5 lakh plus 1 lakh plus 2.5 lakh. So now no need to pass the further entries. No need to pass separately. Now the moral of the story is, don't be confused, sir. These much of things, how can we remember, sir? Now the moral of story is only one thing. At the time of creation of share surrender, equity share capital should be debited, share surrender account should be created. Okay. Sir, whether we are issuing to the other party as a result of sacrifice made, whether we are issuing to the other party for the remaining portion, I don't mind. If you want to utilize the share surrender account, the entry was share surrender to equity share capital account. To the extent of the balance transferred to the share surrender account, I have to make it nullified by amount transferring to the reconstruction, and the other party account should be debited. Got my point? Now coming here, sir, as a result of sacrifice made, you are issuing something, sir. Then what I have to do? How much worth of equity shares you are going to issue? Debit share surrender, credit equity share capital. Share surrender, equity share capital. Now the real sacrifice made by them, how much? 1 lakh. Transfer it to the reconstruction. To cancel the share surrender, to cancel the impact of share surrender, now you can make it transfer to the amount to the text of amount debited to the share surrender. You can make it with the credit to the reconstruction account. Did you got my point? With such basics, let us see one problem on your study mat based on your surrender of shares account, guys. Okay, nothing else. Utilization of share surrender entry, share surrender to equity share capital account. To the extent of amount debit in the share surrender, you have to make it nullify with the reconstruction by making it as a credit. Sir, as a result of sacrifice, if you are issuing the equity shares, sir, ante, as a result means for the real sacrifice, anyway, you can transfer it to the reconstruction, and to the extent of amount there under the share surrender account debit, you have to nullify by making credit together under reconstruction account. So still, if you have doubt, so just let me allow on the problem. On such problem, if I read once again, if you have any misconceptions, then such things will be removed, guys. Okay. Are you with me, guys? All of you? Can I proceed further? Yes, sir. Got it. Okay. So let me take one problem for the discussion. On share surrender. Which is the last problem actually. Problem number 8. 7. 8. Right. Please consider all of you, which was problem number 8, guys. The balance sheet of Revise Limited as of 31st March 2011 was as follows, which was the Revise Limited balance sheet. Share capital given, note number 1. Only equity shares are there, 10,000 equity shares. Okay. Face value 100 rupees each. Then reserves and surplus given 6 lakhs, negative balance. I think so. P&L account debit balance. So debit balance of profit and loss account given 6 lakhs. Then long-term borrowings, note number 3, 12% debentures exist. Then other current liabilities, interest payable on debentures is there. That is outstanding interest. Next, short-term provisions was given, which were 24,000. So what are the short-term provisions? Let's see the short-term provisions as well. Provision for taxation was given, which was short-term provision. So trade payables, there is no number. Coming to assets, PPE, property, plant and equipment 1 lakh, inventory given, trade receivables, cash and cash equivalents. Under PPE, machineries only exist. Now come here. It was decided to reconstruct the company, for which necessary resolution was passed and the sanctions were obtained from appropriate authorities, court approval. Accordingly, it was decided that each share is subdivided into 10 fully paid up equity shares of 10 rupees each. Subdivision of shares is form part of alteration of share capital. Alteration of share capital is form part of internal reconstruction. So existing equity share was 100 rupees face value. Now each was subdivided. There is no change in the paid up capital. There is only change in face value as well as number of equity shares. So once 100 rupees each was subdivided into 10 rupees, 10 shares, then the number of equity shares will become 10,000 into 10 means 1 lakh. Then 1 lakh multiplied with 10 means again 10 lakhs. Okay. Then after subdivision, each shareholder shall surrender to the company 50% of his holding for the purpose of reissue to the debenture holders and trade payables as necessary. Surrender of shares concept was applicable. Once subdivision over, after subdivision, 50% means out of 1 lakh, 50,000 equity shares worth should be surrendered. Now let me pass the journal entry up to this, guys. Up to this. This is illustration number 8. Please all of you concentrate. Up to this, I will pass the journal entries. I don't know really the requirement as well, but I am passing the journal entries first. Illustration number 8. Sir, here one more thing you have to remember. What is that? Sir, after utilization of share surrender, still if there is any balance in share surrender account, we should be transferred to which account? I already told you, reconstruction account only. That point also I am mentioning here. Please concentrate. After utilization of share surrender account, if any balance exists, it should be transferred to reconstruction account. Why? Because there is no difference between share surrender and reconstruction. So if there is no utilization, then we should ultimately make it transfer it to reconstruction account, guys. Okay, that point also you have to put in your mind. Now let us move on with the problem first. So the first and foremost thing, subdivision was happened. Let us pass the journal entry for subdivision. Number 1. equity share capital account debtor, equity share capital account debtor, 100 rupees face value gone, amount of 10 lakh to equity share capital account. So face value was 10 rupees. So face value was 10 rupees. Now there is no change in the paid up capital. Here number of shares earlier was 10,000. Here number of shares for 1 lakh. That is the point you have to remember. If you want, I can mention in the bracket 1 lakh into 10 rupees. Now, out of the 1 lakh shares, to the extent of 50% of the holding should be transferred to share surrender. The entry equity share capital account debtor, equity share capital account debtor, equity share capital account debtor, 5 lakh, 50% means 50,000 into 10. That is 50,000 into 10, 5 lakh to share surrender account. To share surrender account, how much guys? To share surrender account, 5 lakhs. So equity share capital account to share surrender account, how much guys? 5 lakhs. Now all of you observe. How much amount is there in share surrender account? 5 lakhs is there. 5 lakhs is there. Now let me continue. 1 second. I will read point number C at later. Just give a small second to me. I will read. No worries. Next. I will read point number D first, then I will read point number C. The claims of the debenture holders shall be reduced by 75%. The claims of the debenture holders shall be reduced by 75% means, where are the debenture holders claims? 2 lakhs is here, 24,000 is here. 2 lakhs into 75% means 1.5 lakh. 24,000 into 75% means 18,000. Am I right? What he given? The claims of the debenture holders shall be reduced by 75%. Debenture holders are ready to foregone. Debenture holders are ready to foregone 1.5 lakh as well as 18,000. Okay. Then, in consideration of the reduction, as a result, sir, we will reduce. Okay. As a result, the debenture holder shall receive preference shares of rupees 1 lakh, which are converted out of shares surrendered. Oh my God. So first, let me break that entire part. Please concentrate what is happening first. First, let me take debentures here. Debentures, claims to debenture holders. Claims to debenture holders. So total claims to debenture holders was 2 lakhs plus 24,000, which was 2 lakhs was principal plus 24,000 was interest. Total 2 lakh 24,000. You can put like this way only. Now what he is telling, out of claims to the debenture holders, they are ready to sacrifice. They are ready to sacrifice, that is gross sacrifice. So gross sacrifice to the extent of 75%. To the extent of 75% means 2 lakhs into 75%. The principal was 1,50,000 and the interest was 24,000 to 75%, which was 18,000. It was a gross sacrifice. Sir, what about the remaining balance, sir? What about the remaining balance, sir? And not at sacrifice, that is the outstanding balance. That is, balance is there. It should be shown in balance sheet. Should be continued in the balance sheet. Balance was 50,000, still balance under principal, and still interest was balance 6,000. That is different story. That is nowhere relevant for our accounting treatment. It was simply continuing as a liability. So balance as a liability. Now, sir, gross sacrifice 75%. We will agree. But what he is telling out of this, just a second. What he is telling, sir, we sacrificed to the extent of 1,68,000, right? As a result, we are expecting something from you, sir. What we are expecting, sir? What we are expecting? He is telling that, sir, we are expecting worth of 1 lakh something. So they are expecting worth of 1 lakh. Sir, what are those? We will see at later point of time. That's why the real sacrifice, how much? Real sacrifice or the net sacrifice, how much? Can you please participate, all of you? 1,68,000 minus 1 lakh. So the real sacrifice was how much? 68,000. Now, for this 1 lakh, what they are paying, company, what they are paying, concentrate. The debenture holder shall receive preference shares. In consideration of the reduction, the debenture holder shall receive preference shares of 1 lakh, which are converted out of share surrender. Sir, in share surrendered, actually equity shares are there now, but they are issuing preference shares. They are telling the preference shares they are issuing. Just a moment. I skipped one point, now point number C. Out of share surrendered, 10,000 shares of rupees 10 each shall be converted into 12% preference shares of 10 each fully paid up. Out of share surrendered, 10,000 shares of rupees 10 each shall be converted into 12% preference shares of 10 each fully paid up. What he is telling, sir, here 5 lakh worth was equity shares now. Out of such 5 lakh worth, I already converted in the form of preference shares, sir. Now concentrate. So conversion of equity shares into preference shares. What is the journal entry, sir? Concentrate. The entry was actually share surrender account data. Concentrate. First concentrate. Share surrender account data to preference share capital account first, which was 1 lakh. First, what I made, the existing equity shares. Here equity shares are there actually. Here equity shares are there. Now the equity shares were, I cancelled and converted into preference share capital. After conversion of such preference share capital, what I have to do? After conversion of such preference share capital, I have to make it transfer to surrender of shares now. Preference share capital account data 1 lakh to share surrender account. Now, which shares these are surrendered? Preference shares. Now, which shares these are surrendered? Preference shares. But in the real-time scenario, I don't want to pass all these entries. Sir, why, sir? Here, share surrender account I debited. Here, preference share capital account I created. Here, preference share capital account I debited. To share surrender account I created. Now, cancel with each other. Now, the impact was, earlier in the share surrender, only equity shares are there. But now into the share surrender, preference shares are there. No need to pass all such things. But if you want to pass, nobody will object you. If you want, you can pass it as well. Sir, first share surrender, cancel it, then transfer it to preference share capital, sir. Then the amount in the preference share capital, make it transfer to the share surrender as preference share capital. Now, what he is telling, sir, the debenture holders are there now. Here, claim to debenture holders. They sacrificed the real sacrifice to the extent of 68,000, right? The gross sacrifice was 1,68,000, right? As a result, they're expecting 1 lakh worth of preference shares out of share surrender account. Out of share surrender account. So in share surrender, preference shares are there now 1 lakh. They're expecting the same 1 lakh worth of preference shares. So now, what is the journal entry? Please concentrate, all of you guys. It is very easy, no worries. Now, the first and foremost thing I have to think, how much worth of share surrender account you are utilizing? 1 lakh, sir. Now, pass the journal entry for that first. Share surrender account data. Share surrender account data. 2. Now you are issuing the preference shares, not the equity shares. The preference shares are how much percentage preference shares? Can you please check? 12% preference shares. 12% preference share capital. Actually, at the time of utilization of share surrender, the entry was share surrender to equity share capital. But why you are passing the 12% preference shares out of the 5 lakh share surrender? 1 lakh was converted into preference share surrender. Okay. Come back, guys. Share surrender accounted up to 12% preference share capital 1 lakh. This entry was utilization of share surrender. Over na. First of all, utilization of share surrender over na. Next. Coming to debentures. Sir, debentures were 2,24,000. But I am only talking about right now 1,68,000. I am only talking about 1,68,000. So first, the debentures, the existing debentures were how much? That is 12% debentures, right? Right. Okay. 12% debenture holders account data. I'm not talking about debentures. Why I am putting debenture holders? Here, I want to cancel both the principal as well as interest. So that's why I am putting 12% as debenture holders, 1,50,000 plus 18,000. Please make it cancel. Total 1,68,000. 1 second. To the extent of the real sacrifice, 68,000 transfer to the reconstruction. To reconstruction account. To reconstruction account. Real sacrifice, guys. Real sacrifice first make it transfer to the reconstruction in bracket 68,000. Sir, to nullify the impact which was there under the share surrender, you have to transfer 1 lakh to reconstruction account as well, which was 1,68,000. Again, I am repeating, guys. Sir, why you are splitting 68 plus 1 lakh surrender? The real sacrifice was 68,000. Okay. Plus, to nullify the impact of share surrender to the extent of the same amount, you should transfer to the reconstruction account, right? For that purpose, 1 lakh debit, 1 lakh credit, which was 1,68,000. Sir, in the normal scenario, what is the journal entry? You know, just for mentioning the normal scenario, I am writing 12% as debenture holders, 1,68,000. To reconstruction was real sacrifice. To reconstruction 68,000. To preference share capital 1 lakh. This is the normal scenario. That is not the surrender of share scenario. Here also the net impact is same. Please check. 12% is debenture holders debit. To reconstruction 68,000 credit. Now share surrender reconstruction account cancelled to the extent of 1 lakh. So that's why coming is only preference share capital 1 lakh. This is in the normal course, not right now. This is the normal course. So entry number 2, this is entry number 3, guys. Actually, this is the real entry number 3. This is not related to 8. This is just I'm comparing the normal illustration. That's it. Okay. Now let me continue, guys. Please all of you with me. So now in the share surrender account, still how much balance is there? In share surrender account, 1 lakh gone. In share surrender account, still how much balance is there? 4 lakhs. 4 lakhs. All of you please with me. Still share surrender account. How much balance is there, surrender? 4 lakhs. Next. Let me read the problem. Continue. Trade payables. Sir, point A over, point B over, point C over, point D over. Coming to point number E. Trade payables claim shall be reduced to 50%. It is to be settled by the issue of equity shares of ₹10 each out of share surrender. Sir, what is this trade payable? First, let us check as a diagrammatic representation. Trade payables. How much balance is there first for the trade payables? Where it is there? Yes. Trade payables, how much exists, ma? 72,000. 72,000. Now, what he is telling, out of such 72,000, trade payables, claim reduced to 50% means they are ready to sacrifice 36,000. Sacrifice was 36,000. The remaining balance was 36,000. Okay. It is to be settled by the issue of equity shares of ₹10 each out of share surrender. It is to be settled by means not for the sacrifice made by them, not as a result of sacrifice made by them. He's talking about for the balance. 36,000 is there. For this 36,000, we are Issuing equity shares is selling indirectly. Issuing equity shares out of shares surrendered. Out of shares surrendered. That is the point he is mentioning. Now, all of you, please concentrate. Please participate along with me, which was the fourth entry, I think so. First, how much amount you are utilizing the share surrender? 36,000 for that entry. Share surrender account debtor. All of you, please participate. Share surrender account debtor to equity share capital account for the purpose of utilization of share surrender. The entry first. You have to pass the entry for first. Utilization of share surrender. So share surrender account debtor to equity share capital account. Share surrender utilization over. Now, creditors 72,000. That is trade payables account debtor. Trade payables account debtor. Consider guys. Trade payables account debtor. Out of 72,000, real sacrifice. Which is the real sacrifice? There is no gross and net. Which is the real sacrifice? So to the real sacrifice, first you can transfer it to the reconstruction account. And transfer it to the reconstruction account, the real sacrifice amount, which was 36,000. Next, sir, for the balance 36,000, you issued the equity shares out of share surrender. To nullify the impact of share surrender, another 36,000 you can make it transfer to the reconstruction account. That's why entire trade payable 72,000 gone, and the amount should also be transferred to 72,000. So now there is no balance in trade payables account, guys. So trade payables account debtor to reconstruction account. Now one more time I'm repeating, please concentrate all of you. Sir, what is the difference between claims to debentures and trade payables? In case of claims to debentures, still liability is there. The gross sacrifice was only 1,68,000. Only 1,68,000. But for such 1,68,000, is it real sacrifice, sir? No, it is not a real sacrifice. As a result, they're expecting 1 lakh. So the real sacrifice was only 68,000. So that's why the real amount was only transferred to the reconstruction account. Why you are transferring another 1 lakh, sir? And that is not the real sacrifice. To nullify the impact of share surrender here. To nullify the impact of share surrender here. Coming to here, so the real sacrifice itself was 36,000. As a result, they are not expecting anything. So they are expecting 36,000. They are ready to sacrifice 36,000. They are not expecting anything. For the remaining balance, I am paying the 36,000 in the form of share surrender. For the remaining balance, I paid the 36,000 here. Did you got? Sir, in the old scenario, also the total amount was transferred to reconstruction. In the coming scenario, also total amount transferred to reconstruction account. But that is, real sacrifice is different from gross sacrifice. Here, real sacrifice and the gross sacrifice both are same. If you understand this point, this is more than enough. Sir, I understood. I don't understand all these things, sir. Then what is my thought process, sir? Always very simple. How much amount you are utilizing the share surrender? Entry share surrender to reconstruction account. Now check. What is the amount of sacrifice? Transfer it to the reconstruction account. To the extent of balance in share surrender account as a debit, the same account you should also transfer to the reconstruction account. Over. Now here I am developing the thought process. Please concentrate. Thought process. Developing thought process. What is the thought process I have to follow? First. So at the time of share surrender, first thought process, at the time of share surrender, balance, make it credit to share surrender account. Credit to share surrender account, depending upon the balance, how much was share surrender. Next, point number 2. Sir, at the time of utilization, of share surrender, first, whether it should be issued to creditors, whether it should be issued to debentures, for the remaining portion you are issuing, or as a result of sacrifice made by them you are issuing, I don't know. If it is utilization, of share surrender, then the entry was share surrender account debtor. You have to write the entry share surrender account debtor to equity or preference share capital, as the case may be. That is utilization entry you have to write. Then, sir, real sacrifice. transfer to reconstruction. Real sacrifice plus balance debited to share surrender to nullify the impact. Then the party account, that is party means it may be debentures or it may be creditors or it may be bank loan. That's it, guys. This is the thought process you have to develop in your mind. Sir, after completion of all such things, if there is any balance in share surrender, transfer to reconstruction account. So which is a 4-step approach. The thought process at the time of share surrender, make it credit to share surrender account by debiting the share capital. Then utilization, share surrender to equity or preference share capital. Then the real sacrifice amount transferred to reconstruction account. Balance you debited to share surrender, you can make it credit right now to nullify the impact. And party debentures or creditors or bank loan, you have to make it debit. Then if there is still any balance in share surrender, you can make it transfer to the reconstruction account, guys. That is the end. Now coming back to the problem. So up to point number E, I completed, guys. Now coming to F, balance of profit and loss account to be written off. The share surrender and not reissued shall be cancelled. Shall be cancelled means transfer to reconstruction account. Okay. First, after completion of these things, first let me calculate the reconstruction profit or loss. Please, all of you, is there any balance in share surrender account? First, I will check. Here, share surrender account 5 lakhs is there. Please, all of you with me. 5 lakhs credit. Then this entry minus 1 lakh. Next, this entry minus 36. So still in share surrender account 3,64,000 is there. So that's why let me continue the main problem up to entry number 5 over. Let me write entry number 6. Entry number 6. So balance in share surrender transfer to. So share surrender account debtor. So in opening 5 lakhs is there. For debenture holders, 1 lakh in the form of preference shares issued. 36 to the trade payables issued. The remaining amount was 3,64,000. Make it transfer to the reconstruction account. Make it transfer to reconstruction account, guys. Now let me calculate the balance under reconstruction account. Please all of you concentrate. Here itself 3,64,000. Please add it 3,64,000 plus fifth entry 72,000. Okay, plus 72,000. Here plus 1,68,000. Plus 1,68,000. Here no reconstruction. Here no reconstruction. Here no reconstruction. So total I got 6,04,000. Total I got 6,04,000. Is concentrate 7th entry. The reconstruction account debtor. So reconstruction account debtor. I got 6,04,000. From here, common process. First, cancel the debit balance in profit and loss account. P&L debit balance, how much, sir? 6 lakhs. So, to P&L account. 6 lakhs. Anything mentioned? He's only telling that balance of P&L account to be written off. 1 second, guys. Yes. So once we settle the profit and loss account debit balance, still we got 4,000 as a balance. It should be transferred to capital reserve. If there is any balance in the at first time we are getting balance in reconstruction account, so it should be transferred to capital reserve account. Chose 4,000. So reconstruction account debtor to P&L account to capital reserve account, which is balancing figure. You should transfer it to capital reserve account, guys. Sir, you have to prepare the balance sheet from your end, guys. Please, all of you prepare the balance sheet from your end. Nothing is great here. You have to check each and everything, the balance according to the journal entries, and you can complete it. The only new point here, only we learned the thought process under share surrender account. At the time of creation of share surrender, make it credit to share surrender and make it debit to share capital. Make it debit to equity or preference share capital. So utilization of share surrender to equity share capital. Then the real sacrifice transfer to reconstruction account. So balance of you made a debit under share surrender account also transfer to the reconstruction account. Party account should be debited. So balance sheet share surrender, after completion of all such things, make it transfer to reconstruction account. From here, the same thought process you have to continue from your end, guys. Please, all of you, let me know. Did you understand the share surrender account, all of you? Please, all of you, please participate in the doubts platform. Nobody is participating here. Please, all of you, quickly. So this was logged out. Again, I'm logging the doubts platform. Let me check. Sir, nobody is responding. Are you with me, all of you? Please let me know at least one person in the doubts platform. Sir, are you with me? Yes, sir. Understood, understood, understood. These all are at 8:46 like that. So there is no new message. Please, at least one person. Please, can you do new message? Sir, you are with me. If you are really with me, please do the message. No. Let me check the connection as well. Sir, are you there with me, sir? It is in live mode, right? Sir is also not responding. Sir, VC, sir, are you there? Host. Yes, sir. Okay. Now our student got message. Okay, no worries. Thank you, ma. So suddenly I surprised. Yes, sir. Yes, sir. Some persons is telling, just a second. If you could please repeat the share surrender process, sir. Yeah, sir. Once again, this is the last time revision. The share surrender account. Please, all of you concentrate. Sir, don't think remaining all other things. How our thought process will be there. Please, all of you thought in the same process. All of you can easily understand at the time of creation of the share surrender, the share capital account should be debited and the equity share capital account should be credited like this. At the time of creation of the share surrender, equity share capital account to share surrender account. Next, sir, this share surrender, to whom you are issuing, in what way you are issuing, irrelevant for me. Sir, to whom you are issuing means you can issue to debentures, you can issue to creditors, you can issue to the bank loan party, you can issue to the any other liability holder. Whether as a part to payment you are issuing, whether you are a part to payment you are issuing, or as a result of sacrifice made by the other party you are issuing, it is completely irrelevant for me. If at the time of utilization of share surrender, the entry was reversed, share surrender to equity share capital account. The real story begins now. The real story begins now. You have to check clearly, sir, to the party, how much you are issuing as a real sacrifice. The real sacrifice amount you can transfer it to the reconstruction account. The real sacrifice you can transfer it to the reconstruction account. Now, to the extent of you made the debit under share surrender account, you should make also the reconstruction account. For that purpose only, yeah, the real sacrifice was 68,000. I made it a credit. The real sacrifice was reconstruction. And to the extent of the balance is there under debit under share surrender 1 lakh, also I made it as a credit. Now the total you can put it to the party account. That's it, guys. So after this, if there is any balance in share surrender account, you can transfer it to the capital reserve account. So most of the persons have doubt this entry only. Sir, this entry is very easy. First of all, you should think what is the real sacrifice, make it to the reconstruction account. Balance you should made under share surrender as a debit, you should make it under credit. Over. The first entry is very easy, creation of share surrender. Second entry, utilization of share surrender, how much you are utilizing the share surrender. Sir, third entry, for the purpose of real sacrifice as well as amount you already made under debit to nullify that impact. And the fourth impact, balance in share surrender transferred to the capital reserve. That's it, guys. Sir, still if you have doubt, First, you can put under the normal course. You can put it under normal course. Now you can split this one. You can split 12% debenture holder to reconstruction, share surrender to 12% preference share capital. Now you can split, you will get the same impact as well for the purpose of understanding manner. So once again, after completion of the class, you can visualize from your side. So once, if you are sitting peacefully and visualize what really happening inside, then you can have catchy points from your side. Then there is no confusion at all. So just understand the concept and the logics and the catchy points. Please watch from your side by sitting peacefully. So that is the end of share surrender concept, guys. Okay. Now, still we have 10 more minutes, guys. Please let me take up one problem for the purpose of discussion. Yes, sir. Understand, sir. We got it, sir. We can hear you, sir. Yes, sir. Okay, ma. So let me take up the next problem for the purpose of discussion. So very few minutes are there. Let me take up problem number 5, which is a different problem. Please concentrate. Problem number 5. So which is not a share surrender concept, guys, which is the normal course of the problem. Please concentrate. A repair limited is in the hands of a receiver for debenture holders. Sir, who is the receiver for debenture holders, sir? Ante, the person who protects the interests of the debenture holders is known as receiver for debenture holders. In generally, you will know who exactly official liquidator, who exactly receiver for debenture holders. Our next chapter will be the liquidation of companies. That's why I don't want to take that much of headache here. This receiver for debenture holders means if at any point of time, if the protection of debenture holders will impacted, then debenture holders will appoint the receiver. What he will do, sir? What he will do? Receiver of debenture holders will take some of the assets. He have the right to realize such assets in the outside market. From the proceeds of such assets, he can make settlement to the debenture holders. That is nothing but receiver for debenture holders. So repair limited is in the hands of such receiver for debenture holders who hold a charge on all assets except uncalled capital. Simply is telling he have a right on all assets. Sir, uncalled capital, is it an asset? As uncalled capital was never shown in the financial statements. But at the time of liquidation or at the time of closure of the company, or the receiver of the debenture holders have a right to ask amount from the unpaid value of the equity shareholders. Why? Because in a company, the liability of the equity or preference shareholder is to the extent of the unpaid value, which is nothing but uncalled capital. Okay. Repair limited gives the following information as regards creditors on 31st March 2011. As regards means after creditors, the balance was given. So the problem was really not at all understandable, sir. I do agree. If liquidation of companies chapter was completed, what they are telling you can easily understand. But for the purpose of internal reconstruction, I don't require all such things. I require only the balance sheet, right? So I have to develop the balance sheet from the given information. Ignore the remaining information, only see the balance sheet. Property, plant and equipment cost 3,90,000, estimated at 1,50,000. I don't need the estimate. I need only the cost, which is the book value. For the balance sheet, estimates doesn't come. Why he is given the estimate? Again, I am telling you liquidation point of view. I need only the book value. Cash in hand of the receiver, which is an asset. I will consider it. Charged under debentures. Sir, 1,50,000 plus 2,70,000, he got 4,20,000. Not required this. This doesn't come in the balance sheet. After adding these two figures, he is getting 4,20,000. How he is getting, that is different issue. But in balance sheet, it doesn't come. Uncalled capital never came in the balance sheet. Deficiency. Sir, I don't know about the deficiency at all. Deficiency also doesn't come. Just leave it. Now what he is telling further, let me check. 6,000 shares of rupees 60 each, 30 rupees paid up, 1,80,000, which is a paid up equity share capital will come. First debentures, 3 lakh will coming as a liability. Second debentures, 6 lakhs will coming as a liability. Unsecured trade payables will coming as a liability. First, let us build the balance sheet, guys, quickly. So we have very less time. Please all of you concentrate. Illustration number 5. First, let me build up the problem, that is the balance sheet. Illustration number 5 answer. So the balance sheet of which company, which is Repair Limited. We have to develop the question as well from our end. Balance sheet of Repair Limited. So how he is given the balance sheet? The known things, first you can record property, plant and equipment. Just T-shaped balance sheet I am recording. PPE 3,90,000. Okay. Not coming. Here you can come. Equity share capital 1,80,000. Equity share capital 1,80,000. Then first debentures 3 lakh. First debentures 3 lakh. Okay. Then second debentures 6 lakhs. Second debentures 6 lakh. Then unsecured trade payables. Unsecured trade payables. How much? 4,50,000. Then unsecured trade payables 4,50,000. These are the known information. Please, all of you, balance the balance sheet. 1,80,000 plus 3 lakhs plus 6 lakhs plus 4,50,000. How much here? 15 lakh. 30,000, right? Am I right? Yeah, 15 lakh 30. Here also put 15 lakh 30,000, sir. But here doesn't match now. Once again, any cash and cash equivalent is also there. Please consider it. Yeah, cash in hand of the receiver is there, right? Cash 2,70,000. Please don't ignore that. Cash and cash equivalent 2,70,000. Now, still not yet matched, which was debit balance in P&L, which was a loss-making company now. So this is the important point here. You have to find out the P&L account debit balance. That is indirectly he is giving 15,30,000 minus 3,90,000 minus 2,70,000, which leads to 8,70,000, which is balancing figure, guys. 8,70,000 is the P&L account debit balance. So this is the balance sheet. From here, I have to do the problem. So please ignore the entire given information. This is the real balance sheet. Now, what I have to do, sir? A holds the first debentures for 3 lakhs. Second debentures for 3 lakhs. He is also an unsecured creditor for 90,000. Oh my God, what he is telling? Out of this entire 3 lakhs was held by A. A holds the first debentures of 3 lakhs. This entire was held by A. Okay. And the second debentures for 3 lakhs. Out of this 6 lakhs, 3 lakh was again held by A. Okay. He is also an unsecured creditor for 90,000. Okay. Out of this, again, how much, guys? Unsecured creditors 90,000 again related to A. Now, can you please tell me, all of you, how much amount we can able to pay as a company? How much amount we have to pay to the A? 3 lakhs plus 3 lakhs, 6 lakhs plus 90,000, 6 lakhs 90,000. First, let me put that amount to A account, guys. That is first debentures account debtor 3 lakhs. Second debentures account debtor 3 lakh. Unsecured trade payable account debtor 90,000. To whom we have to pay, sir, ante A account, which was 6,90,000. He is telling the same point, right? Sir, this after transferring to A, there is no balance in first debentures. After transferring 3 lakhs to A, 3 lakhs is there in second debentures. Unsecured trade payables remaining, how much is there, sir? Under 3,60,000. Okay. Now let me continue. B holds second debentures for 3 lakhs and is an unsecured trade payable for 60,000. In the same way, second debentures of remaining 3 lakhs belongs to B, and unsecured trade payable account debtor also belongs to B. How much? Unsecured trade payable 60,000. So to B account was 3,60,000. Now there is no balance in second debentures and first debentures. Trade payable, how much balance is there, sir? Under 90 plus 60. 60,000 is to B Here 3 lakhs to B. So now there is no balance in first debentures and second debentures. There is only 3 lakhs balance in unsecured trade payables. I make a transfer to A as well as B to the respective creditors. He clearly given. The following scheme of reconstruction is proposal. A is to cancel 2,10,000 of the total debt owing to him. So total debt owing to him, how much? 6,90,000. Out of such 6,90,000, ready to cancel 2,10,000. Which was sacrifice. So remaining how much, guys? 6,90,000 minus 2,10,000. Remaining how much? Come on, guys, all of you. Balance 4,80,000. Okay. A is to cancel 2,10,000 of the total debt owing to him to bring 30,000 in cash. Oh, he brought 30,000 in cash as well. He is bringing 30,000 in cash means for A, you have to pay 30,000 as well. Not only this 4,80,000. Why? Because this 30,000 is brought in the form of cash. Okay, fine. And to take first debentures in cancellation of those already issued to him for 5,10,000 in satisfaction of all his claims. Now 4,80,000 plus 30, how much, sir? And 5,10,000. For these 5,10,000, we are issuing new first debentures. Already first debentures was cancelled now. These are different debentures. Now these are issuing new first debentures to take the first debentures in cancellation of those already issued. These were already cancelled. These are issuing the new first debentures. Now for this entire thing, what is the journal entry, sir? Please concentrate. A account debtor. First let me bring A cash as well. You should bring 30,000 cash now. First, if A introduced the cash account debtor to A account. How much, sir? 30,000. He brought out the cash. Now 2,10,000 he sacrificed. Now A account debtor to consider A account debtor to reconstruction account. Sacrifice how much? Sacrifice 2,10,000. So we are issuing the new first debentures. How much we are issuing? 5,10,000. So how you got such 5,10,000, sir? And that is the balance 4,80,000 plus cash he brought out 30,000. That is 4,80,000 plus 30,000. Now the total amount you can make it cancel, which was 2,10,000 plus 5,10,000, 7,20,000. Now there is no balance in A account. Please check if you want. Now there is no balance in A account, guys. So entire amount was 7,20,000 after broughting the amount of 30,000. So 6,90,000 plus 30, 7,20,000. I'm cancelling that entire A account, transferring the real sacrifice 2,10,000. For the remaining, we are issuing the new first debentures. Nothing is great here. This is the important point with respect to A. Now coming to second point, guys, please all of you bear 5 to 10 minutes. I'll complete the problem. This is important problem. That's why I'm taking into discussion. B is to accept 90,000 in cash in satisfaction of all claims by him. B is to accept 90,000 in cash. Okay. He's not bringing. He is to accept 90,000 in cash in satisfaction of all claims by him. That means for B, we have to pay 3,60,000. But what he is telling, okay, if you pay 90,000, that is more than enough for me. He will accept. That means remaining amount he is ready to sacrifice. Now, what is the journal entry, sir? Please concentrate. B account debtor 3,60,000. We are paying the cash of 90,000. Now, for the remaining thing, he sacrificed, which was transferred to the reconstruction account. 3,60,000 minus 90,000, which leads to 2,70,000. That is the point he is indirectly telling. I'm ready to sacrifice 2,70,000. You can make it cash 90,000. Okay, fine. Coming to point number 3. Again, point number 3 is important. Concentrate. in full settlement of 75% of the claim of unsecured creditors other than A and B. First, let me check. Come here, guys, all of you. Let me check unsecured trade payable other than A and B, how much? Other than A and B, how much? Which was how much? So in the balance sheet, we got unsecured trade payable 4,50,000. A 90 plus 60 means 1,50,000. 4,50,000 minus 1,50,000 means 3 lakhs. So unsecured trade payable other than A and B is talking, which was 3 lakhs. Okay. Now, unsecured other than A and B, out of that, in full settlement of 75% of the claim. Now he is talking about, out of this, he is talking about 75% of claim. He will talk 25% claim, I think so, at later. So first, 75% of claim means 3 lakhs into 75%, which is 2,25,000. So 25% of claim means 75,000. Let me read. Just as per the problem, I am drawing the diagrammatic representation, nothing else. In full settlement of 75% of the claim of unsecured creditors other than A and B, agreed to accept 4 shares of 7.50 each. 4 shares of 7.50 each. Fully paid against their claim for each share of 60. What he is telling, for 60 rupees share, they are agreed for accept 4 shares of 7.5. 4 into 7.5 means 30. Indirectly, what he is telling, for every 60 share, 30 rupees they are expecting. Remaining 30 rupees sacrificing. Simply they are telling, sir, for 60 rupees share, we are expecting 30 rupees means 50% is sacrifice. 50% is payment. So 50% was sacrifice. 50% is payment in the form of equity shares. In the form of equity shares. Okay, fine. I understood that point as well. Please concentrate. I will read once again. In full settlement of 75% of the claim, I already divided the 75% claim. Other than A and B, agreed to accept 4 shares of 7.5 rupees each, fully paid against their claim for each share of 60. So 60 rupees, we are giving 4 into 75 means 30 rupees. That is 50%. They are sacrificing 50%. We are paying in the form of equity shares. That is 50% sacrifice means 2,25,000 divided by 2, which are 1,12,500. Here we are paying how much amounts are under 1,12,500. Am I right? What he is telling, sir, we are issuing each share at 7.5 each. We are issuing each share at 7.5 each. 1,12,500 divided by 7.5 means how many number of shares I have to issue? 15,000 shares I have to issue. 15,000 shares into 7.5, which leads to 1,12,500. Just a moment. The balance of 25% is, where is the balance of 25%? Here it is there. Is to be postponed and to be payable at the end of 3 years from the date of court's approval of the scheme. They are telling that it can be treated as loan, which was a long-term loan. He's telling that I can treat it as a long-term loan. Postponed and to be payable at the end of the 3 years means which was a long-term loan. The nominal share capital is to be increased accordingly. Leave it. Uncalled capital is to be called up in full. And 52.50 per share was cancelled, thus making the shares of 7.50 each. Again, point number 4, let me break the sentence. Uncalled capital is to be called up. Where is the uncalled capital first? Where is the uncalled capital first? Just a second, please. Where is the uncalled capital? Here 6,000 shares are there. Out of 60 rupees each, 30 was paid up means remaining 30 rupees was unpaid up, which is uncalled capital, which was 1,80,000. Let me call up. The entry was bank account debtor to So how many number of shares? 6,000 shares into 30 rupees, which is 1,80,000, and passing the direct entry to equity share capital. We have to pass split share application and allotment, then capital actually. So to equity share capital 1,80,000. Now the face value will become how much? Here 1,80,000 is there. Already here 1,80,000 is there. Now the face value was 60 rupees. Now what they are telling, after uncalled capital, 52.50 per share was cancelled. Out of 60 face value, 52.50 per share was cancelled, thus making the shares of 7.50 each. Now what I have to do, sir? Equity share capital account data. Existing how much, sir? And 60. Total 3,60,000. Total to equity share capital converting into 7.5 to reconstruction account. How much amount was cancelled? 52.5. 6,000 into 52.5, which was 3,15,000 here. Here 45,000 here. So this is the end of the journal entry for point number 4. Assuming that the scheme is duly approved by all the parties interested by the court, given necessary journal entries. So one more time I'm repeating, sir, which is important problem, guys, which is a tricky problem. Just I'm putting the star mark. 1 second. So important problem. Please all of you consider this. This type of problems may appear in the examination as well. First and foremost thing, the given information was not a balance sheet. I build a balance sheet. Which was repair limited. I got a debit balance of P&L account was 8,70,000. So PP you should take in at book value, not the estimated price. Cash was given. So uncalled capital doesn't exist in the balance sheet. Equity share capital I taken, first debenture, second debenture, unsecured trade payable, everything was given. Now he's talking about, sir, out of first debentures, second debentures, and unsecured payables, something related to A, transferred to A. Second debentures, unsecured trade payables, something related to B. Sir, B, he told very simple. B, for B, final settlement, we are paying 90,000, remaining balance was profit. For A, little bit he complicated. Sir, apart from that, he subscribed 30,000 for the cash. He paid 30,000 cash as well. So the total amount payable to A was 6,90,000 plus 30, which leads to 7,20,000. So that's why I cancelled 7,20,000. Out of it, he sacrificed 2,10,000. For the remaining portion, he expected the new first debentures. So A payment was over. Then coming to unsecured trade payable other than A and B. So out of here, I checked other than A and B, 4,50,000 minus 1,50,000. The remaining portion was 3 lakhs. Out of this, 75% claim, 25% claim. 25% claim treated as a loan. Leave it. For the 75% claim, 50% was sacrificed. For the remaining 50% was paid in the form of equity shares. So each equity share issued was 7.5. So that's why number of shares issued as 15,000. Sacrifice made was transferred to reconstruction account. So for this, I passed the journal entry like this. So where is the journal entry for this? Not yet passed the journal entry. Okay. So let me pass the journal entry for this claim. Please all of you concentrate. For this, the entry was unsecured trade payable account debtor. I have to cancel 2,25,000 to reconstruction account. How much amount? 50% sacrifice means 1,12,500. Remaining was equity share capital account. Face value was 7.5 rupees per each. Amount was 1,12,500. So this is the journal entry for 75% claim. 25% claim simply unsecured trade payable account debtor to long-term loan account. Long-term loan account, which was 75,000. Then after that, so the uncalled capital was fully paid up. The partly paid up equity shares were fully paid up by making a call bank to equity share capital 1,80,000. Now each equity share is showing at 60 rupees. Out of that, 52.5 rupees was cancelled by transferring to reconstruction account. Remaining was 7.5 rupees, which were 45,000, guys. This is the end of the problem. You have to complete from your end. Assuming the scheme was duly approved, give necessary journal entries. Okay, just they are asking the journal entries. I gave only one HW, which was balance sheet for the previous problem, and one more HW just I am giving. Please all of you complete from your end. The problem was illustration number 6, HW. You can easily complete it, no doubt about it. So which is almost similar to like problem number 5. Just now I mentioned illustration number 5, almost a similar problem. Please all of you complete from your end, guys. Okay. Now this is not like problem number 5 as well. Sorry, this is not like illustration number 5. This is normal problem, just a casual problem. Please all of you complete from your end. Illustration number 6 as well as illustration number 8, balance sheet. So in the next session, we are going to meet with liquidation of companies. Before going to liquidation of companies, just I will give 5 to 10 minutes to clarify the doubts as well. Here, I'm running out of the time as well. So please bear me 2 minutes time. Let me quickly check any doubts. Vijay Shankar, please allow me. I will teach that problem, that what you asked. So there is some issue in between me and study mat. I will tell you at my initial stage of liquidation of companies. Please bear with me. Okay, fine. So hope I'm closing the session, guys. We will meet at the next session with liquidation of companies as well as doubts clarification on internal reconstruction and amalgamation. Still, if you have anything. Okay, until bye. Have a nice day.